Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we begin Module 2, Profitable Chart Patterns for Swing Trading. We're going to take a look at the wedges and triangles. Now, wedges and triangles are very common patterns that people tend to pay quite a bit of attention to. They are simply when a market has, for example, pressure in both sides and will bounce back and forth and they form a triangle. There are three different types of triangles, but they all have one thing in common. You want the last 20% to not be broken into. So you want like about 80% or less of the market forming the triangle before it makes a breakout of what is support and resistance kind of converging, showing a tightening market, right? Now, this is the symmetrical triangle. This shows both buyers and sellers pushing the market. That means that sooner or later we're going to have a breakout. Now, whether it's to the up or down, we don't know, but it is worth noting once we do break one of these trend lines. The height of the triangle, and let's just say if it's $5 from the highest to the lowest point, is the projected move on a breakdown or breakout. Doesn't really matter. If we drive through to the last 20%, typically it loses its momentum and it just kind of goes on. It's a failed pattern. That is what is known as a symmetrical triangle for obvious reasons. It's symmetrical. It's neither leaning higher or lower, but it is showing that momentum is picking up, or momentum is about to pick up. So over here, I'm going to draw an ascending. Ascending triangle is exactly what it sounds like. Price is ascending over time. The buyers are becoming more and more aggressive, driving a trend line higher. There's a level here that we can't break out of. Again, you want the 80-20 rule. We break out to the upside. You take the measurement here. If it's $3, you're looking for a move of $3 to the upside on the breakout point above this resistance. Finally, a descending triangle, same as this, just the exact opposite as you would anticipate. We get a breakdown. This is $10. You're looking for a move of $10. So that's pretty basic stuff, but a lot of people pay attention to the triangles. They're probably one of the most common patterns. There's also the rising and the falling wedge, which they're really just triangles, but maybe tilted a bit. So, for example, you're in a downtrend and support and resistance kind of converging. That's a falling wedge. Once we break the top of that trend line, the target is the top of the wedge. Stop loss goes right about here. With the rising wedge, it's the same. You're looking to go down to here. You put a stop loss above it. So let's take a look at how these work in real life. This is a triangle based upon these candlesticks here. Let me clean this up just a bit. It's not really favoring one direction or the other. It's symmetrical. You can see that we have the last 15 to 20% there. 20% roughly. We break down. We get the measured move. So let's go ahead and draw that out. And from the breakdown, you can see that's exactly where we fell and then found a little bit of support. A lot of times the market will pause right in that area. So where would you put a stop loss? Well, the stop loss is quite simple. It's on the other side of the triangle, obviously. But a good bet is to put it above the last rise. So, there's no need to put your stop loss up here. If it breaks through here, if it turns around and breaks through here, then it's a failed pattern. And they do happen. So something to kind of think about there. Dollar Canada, I have a descending triangle. you can see that the height of the triangle is about that because you don't really have the support level there. It really doesn't start till about here. So sometimes you kind of have to pay attention to those things. And you can see that, that's exactly where we fell to. Your stop loss could have gone here. Pretty straightforward. And finally, this is an ascending triangle. US steel, we break out maybe 65% of the way through, and you can tell clearly we hit the implied target. Monero has a falling wedge here. You can see a bit of a trend line, Clean this up a little bit. And we most certainly hit the top of that. Stop loss could have gone right there when you bought Monero. Then finally, Visa, rising wedge, perfect rising wedge. And not only did we hit the bottom of that, matter of fact, we gapped down there. It began a major, major sell-off. So definitely worth paying attention to. Minimum, you're trying to either get the height of the triangle or the beginning of the wedge pattern. Most of the time, they eventually go farther. And I think that's probably because so many people recognize these patterns.